How is the Toronto real estate market going to crash? I'm going to break that down exactly how I think it's going to happen on this month's episode of the Prime Properties TO podcast. Stay tuned. This one's going to be a doozy. It's going to get controversial. Good day, Toronto. Welcome to this month's episode of Prime Properties TO podcast. So glad you could join me here today. And on this month's podcast, I am going to talk about how the real estate market is going to crash. Yeah, everyone's always kind of talking about, well, at least not everyone, like at least the bears are saying, oh, the real estate market's going to crash, whereas the bulls are going to say, oh, you know what? This kind of price increase is going to go on forever. But I want to take this month's episode to kind of go through the thought exercise of what is it actually going to take for the real estate market to crash. Now, when I say crash, generally it means prices are going to dip below 20%. There's going to be a lot less demand for the actual real estate market. Not so much like, a dip, like a dip I would call like 3, 4, 5%, 6%, which is kind of what we're seeing in the current condo space right now in the downtown core. But like a crash, as in like, oh my God, the world's on fire kind of thing, okay? So I'm going to break this down into multiple categories on what I think could cause the real estate market to crash. And again, this is all just a thought exercise. Full disclosure right now, this is not happening. These are just things that I was thinking that, this has to happen in order for the Toronto real estate market to go plummeting down in terms of prices. Now, you have to remember, when there's such a big divide for real estate that either you own real estate and emotionally, you want the prices to go up because you're in the market. But if you don't own real estate, then you're like, I hate it. I want prices to come down because I want to buy real estate. And I'm going to take the emotion out completely and just say it as it is, what's going to happen what needs to happen in order for the real estate market to crash, right? So keep in mind, I'm not trying to be either a bearish person, meaning like I want the whole market to crash, or a bullish person. I'm just want to look at it logically and kind of think in my head all the cascading effects and the things that need to happen, or like such as events, in order for the real estate market to crash. So without kind of, you know what? Let's just get started. Forget it. Yeah, I'm not even going to say this. Let's just get started. So I've broken this down into 4 categories. I was thinking over the last few days, I was just like, what is it really going to take for this whole thing to like come crashing down? And is it going to freak me out? So these are the things I really should look out for if that happens, right? So the number one thing I think is going to mess everything up, government policies. Yeah. This is probably a really boring topic to start with, but, and I never liked this whole government stuff. I was never into politics, but just keep in mind that the more I kind of look into my finances, the economics and everything, the more I see that government policies are the fastest way to make a change in any market. All right. So let me give you an example as to why this is very important. 2018, or early 2018, government, this is the OFC, right? I forgot, Office of Superintendent Financial, something, right? So they basically came and said, hey, you know what? Everyone, when you get a mortgage, you have to test like a few percentages higher in order to get it. So that's a stress test. Then the market, boom, dropped 4 months. All it took was a government putting in a policy that changes how people buy real estate. Here's another one, 2017, Kathleen Wynne, famous Fair Housing Plan, right? Foreign buyer tax came in, 15% tax on anyone who was in a Canadian citizen. Boom, price drops at 905. Crickets, right? Again, government policy. So that's why, although it's not the sexiest topic, this is the most likely topic that will cause a crash in the Toronto real estate market. So whether this is good or bad, it's not within our control, right? Like, you can even do your part in voting, but ultimately it's the government that's going to kind of control what's going to happen with the policy and kind of which way they want to head. So that's why I'm going to be talking about this, because there's a lot of things that the government could change that could make the market crash overnight, just like what we saw with the stress test and the foreign buyer tax. So here's just some I thought of. The first one, let's increase the minimum down payment. This is ultimately going to reduce the buying pool and then the demand's going to drop. So let me tell you what's happening right now. If you are a first-time home buyer, or you are going to live in the property you're buying right now, you are allowed to buy with less than 20% down, meaning you can go as low as 5%, 10%, 15%. But if you're buying this as an investment, as like a rental property, you have to have minimum 20%. So, we're in GTA. Let's just say we're in the, lower income, lower purchase price. That means if you're going to buy something in like the $500,000, which is technically actually a low purchase price right now, your 20% is $100,000. Getting $100,000 post-tax is difficult. If you're a first-time home buyer, or sorry, not if you're going to live in the property, you can use 5% to buy, which is about, can't do the math, $25,000, right? So it's a lot easier to save that amount. But if the government were to go, boom, change the minimum down payment, make anyone who's buying it 20%, anyone who's investing 35%, getting to that point is going to be so much more difficult, right? So even if, like, say, I, as an investor, have investment properties and I refinance to take money out, if I need to come with 35% down instead of 20% down, that's like double the amount of money I need. So therefore, it's going to take a lot of people out of the market just like that. You see, government policies. Here's another one. If the market gets too hot, the government is like, all right, I'm going to talk about reducing amortization. Boom, exact same thing. As a minimum down payment. It's going to reduce the buyer pool, demand drops, and the inventory is going to increase because less people can buy, right? So as of right now, if you have less than 20% down payment, you cannot get more than a 30-year amortization. So for those of you who are just getting started or starting or looking at real estate, amortization is how long your mortgage is, right? So generally you get like 5 years, 3 to 5 years from a bank, but your entire mortgage is about 25 years. But if you have 20% down, it allows you to amortize that entire debt you have over 30 years. So the difference and why this is important is because if you have a $500,000 purchase, which is like, $400,000 mortgage on 20% down, when you change from a 30-year amortization to a 20-year amortization, your monthly payments go from $1,600 to about $2,200. That's an extra $600 a month. So when mortgage brokers are calculating your what we call debt service ratios, every single month you have a larger debt to pay. Therefore, you're going to have to be able, so you're able to qualify for less money. That is going to mess up your ratios, meaning you can buy less. That, again, reduces the buyer pool because it makes the amount of income you need to buy a property that much higher. So it's going to knock a lot of people out of the power if the government wants to reduce the buying, slow the market down. Here's another one, right? Sorry, before I do another one, I did some math here on my look at it. So yeah, here it is. Right. So when you take the two government policies and merge them together, this is what the numbers look like. So currently, if you were to do 20% down and 30 amortization, your monthly payment, like I said, was about $1,600. When you do the 35% down in the example I was saying, and you reduce it to 20%, 20-year amortization, it moves it up to $1,800 a month. Now that doesn't seem like much of a difference, but now I have to remember, in our current scenario, it took you about maybe $115,000 after land transfer tax to buy. But in the new government updated policies, it's going to take you $325,000 to buy, and the monthly payment is higher. So you see, the government policies can change a ton of things. Here's another one that I thought of: increasing the stress test. Yet again, so in 2018, I was saying earlier, it reduced everyone's buying power by 10%, and made that anyone who's buying over $1 million, you had to have at least 20% down. So maybe we suppress that to maybe $800,000-$900,000. You need 20% down, or maybe instead of testing a few 2% higher on interest rate, roughly, maybe we go to 3%. So that's going to slow the market down. Like the market will adjust, but it's going to reduce the buying power for a lot of people. And that's why it's very difficult to kind of foresee what's going to happen with government policies, because the market will adjust, kind of like with the stress test. But for a little bit, it's going to slow the market down. Now, I do think that the biggest one will be like if we increase the down payment or reduce the amortization, because that's going to affect everybody, right? Now, here's another one. Like it's in some countries. I don't think it's going to come to Canada, and I'm going to say whether these things are going to happen a little bit afterwards. But what if legally you're only allowed to own one property? Right? If I can't buy anything else, the demand obviously is going to drop because the buyer pool is going to be so much lower. Then inventory increases and price drops, right? So these are like 4 different things I just thought of, just like that the government policies could totally make the real estate market crash. Now let's go through the exercise. Is this going to happen, right? Like this is just my thought process. It's not the 100% right, or it's not prediction. It's just, this is what I'm thinking in my head. Now, are any of these things I said is going to happen? So let's go through it. Number 1. Is the down payment going to increase? You know what? There's a chance, right? Because if the government really wants to kind of slow the market down, then that's something that can do. And again, I'm taking the emotion out of it. I'm just applying logic, right? So if I look at the government, they're trying to reduce the balance sheet and all that stuff and make sure the economy is good, right? If we look at Canada, there's a chart, if you could like Google Canadian GDP by percentage. In 2018, the Canadian real estate market accounted for 13% of total GDP. That is the highest percentage, only behind manufacturing, which is 10%. Now take a step back. Real estate is 13%, the highest percentage of gross domestic product in Canada. That means so much of our tax revenue, our economy is riding on real estate. So, is the government going to slow down the curve of real estate? Maybe if it gets too out of hand, but like if we're trying to grow the economy and make the country a better place, I think real estate is so big that it's hard for them to kind of reduce those amounts. That's why when we saw like little minor tweaks like the stress tests and whatnot, they're trying to basically control a small little fraction of the real estate market, but still allow the rest to go because it's such a big economic engine of Canada. Same thing, right? The next one, are they going to reduce amortization? Same thing as what I said, maybe. But if they do that, it's going to affect the real estate market so much that it could curb and slow down the GDP. Will they do it? I don't think so. But in the last 10 years, they did reduce amortization a lot to kind of reduce the buying pool. Because way back then when we got started, we used to be able to do 0% down, 40-year amortization mortgages, and also they gave you cash back. Yeah, this was like 2008. It's nuts. It's a lot more difficult now because like back in the day, you can just like, here's my driver's license. Can I have a mortgage? You're like, okay, here you go. Because if you've ever done a mortgage recently, it's so much paperwork. It's absolutely insane. All right. So another one, are they going to increase the stress test? This one, I think there's actually a higher chance of it maybe potentially happening just because it is a very good way to kind of slow down the ability to buy. What I do think is that if a stress test is going to happen again, last time, it kind of reduced the buying power of people, meaning that they couldn't reach the higher purchase price properties. These are like your detaches, right? So when the pandemic hit, because interest rates came down, people were to buy more so that the prices for detaches went up. And plus, people wanted to leave the city. So if we see another stress test again, I do think that maybe it's a way for the condo to come back because the condos have been softened a little bit right now, but they are on the lower purchase price, right? So if everyone loses another like 10% or 15% of whatever the government decides to do, right, reduces their buying power, then they're priced out of those detaches and semis and towns. And it's going to be like, okay, well, I have to buy condos now, right? So therefore, condos will maybe come back. Maybe there's more demand because realistically, people who want to buy, they're still going to buy anyways. It's just about what they can buy, right? People's buying power realistically hasn't changed in the last 10 years. Like the income's about the same. What happens is government policies and interest rates that dictate what people can borrow because real estate's fueled by credit. More about that later. Right. So that's kind of what I think. Like that's a just small chance that could happen. If it's going to happen, we'll see. Right. You guys kind of read the tea leaves and what the government says. Here's the last one I was talking about government policies. Are they going to make it so that you can only buy one property? Again, if you have the bears and the bulls, I'm going to say the bulls are going to be like, I hate it. End of the world. Blah, right. Well, but the bears, right. They're like, oh, yeah, this is the most fair thing. But you have to remember one thing. It's not even talking about like the real estate market or whatever. It's about the growth we have in Canada. Right? So the government, we know, does not build enough rental buildings. Only recently in the last little bit has there actually even been incentives for like big companies like pension companies or like big other companies like builders that are building purpose-built rental. Now you may have heard of that in the last few years, but previous to that, it was never like that. It was always just condos. So this meant that the housing supply, even though we were getting hundreds of thousands of people a year coming into, say, Ontario, the government wasn't building enough houses for these people, which meant that it was up to the private sector or like personal, like sorry, not personal, like regular investors like you and I to actually increase the supply by buying up these condos or buying up these houses, turning these houses into 2 units, converting them and adding more living space, right? The government doesn't do that fast enough. So if the government is going to reduce the amount of properties that we can own, it's going to be like, well, I can't buy that anymore. Therefore, the inventory will stay there. Maybe the prices will come down, stay stagnant. But what if the people can't buy anyways when they just get into the country? Or maybe those people who have high enough income, because you really have to have prices drop like 50% for everyone to be able to buy again. And I don't think that's happening. So is the government going to prevent people from buying more than one property? Very, very unlikely, because they know they're going to shoot themselves in the foot, because they're like, well, people are homeless because they can't buy anything and there's no properties for people to rent. Because if you can buy one property, it's going to be the one you live in, right? Realistically, for investors, it's only going to be like, okay, well, my mom and dad bought this property. We live here. Maybe my other parent can buy one investment property and me as a son can buy another property. And then you're capped, right? So you also have to look at the other people, right? Like what if, like, I look at my portfolio. If they turn us so that I don't have one property, what's going to happen? Do I have to sell my entire portfolio, right? It's a whole bunch of weird things that can happen. Like, is it going to happen? Maybe, right? But I don't think so. Yeah, it's not maybe. Yeah, probably not going to happen. But again, thought exercise, right? Okay, so let's move to the second category that I think could cause a Toronto real estate market crash. This is bank lending. Again, not the sexiest thing to talk about, but again, this is, I think, the second quickest way for the real estate market to crash, because, again, it's not things that we can control, but real estate is driven by the credit market. Oh, hi, Coco. Sorry, that's my dog. So real estate market is driven by credit and how much you can borrow, right? So it's very, very rare, like very rare, that I see someone paying all cash for a property, like all cash. So when we say all cash, it really means that they're not needing a mortgage, right? So I've been trading for almost 10 years now, and to see like a local person, I mean like a Canadian person that's not coming from overseas, buy all cash, super rare. So here are some examples of how I think the bank lending and what they can do is going to cause a real estate market crash. First, number one, if the banks think that the real estate market is too unstable, they're just going to stop lending. You have to remember, if there's no money from the bank, no one can buy, inventory increases, there's no demand, prices drop, boom. Remember, I was saying real estate's fueled by credit. So if the banks think that, oh man, this is too unsteady. Remember, banks are for profit business. So if what they're lending to you right now, they don't feel it's going to get their money back or they're going to lose money, they're not going to lend. Therefore, no credit. So that's the easiest way. So that's why you always have to kind of monitor kind of the bank's, what do you call it? The bank's kind of like approach on what they think about the real estate market. So when you have these kind of like big banks come out saying, oh, BMO is thinking 2021 is going to be a massive flagship year for real estate. Okay, so BMO probably thinks the real estate market is going to be pretty good. But maybe RBC comes back like, oh, real estate in 2021 is going to go plummeting down, 10 points drop. Maybe they're not going to be lending mortgages, right? But remember, we have 6 big rainbow banks, right? So it's not like just one person's going to dictate all of it. Second thing for bank lending, what if the bank increases the mortgage rates? Remember, we always talk about Bank of Canada's interest rate. That does dictate to an extent what the mortgage rate is going to be. But realistically, it's the banks that control what the mortgage rates are. So if you're doing kind of like a mortgage right now, you'll probably hear something about prime plus or minus, right? So that plus or minus is what we call the discount or the cost. So if the prime right now is, I think, like 2.45 on my last refinance, I think. And then we got a mortgage of prime minus 0.8. That put us our mortgage around like 1.6, right? So that's what our variable mortgage rate is right now. What the banks do to tweak that mortgage rate is they change that plus or minus. So when COVID hit, they reduced all the minus, so to the discount. So it's just prime. Your variable mortgage rate or VIX, whatever, was just prime. But as the market got more competitive and people wanted more business, and again, banks thinking they want to lend more, they get more competitive by dropping that minus, right? So instead of just prime, it goes like prime minus 0.2, then 0.4, then 0.8, and whatever, right? Because banks dictate what that interest rate is, and that's what's going to drive the real estate market. Yes, again, Bank of Canada rates are somewhat affecting it, but really it's the banks that control it. So this is why in the summertime, if you go buy properties, you always see these promotions for mortgage rates, because at least it's my thought process. When spring market heats up, people are buying, right? That means there's a lot of transactions. The banks reduce their interest rate to get business for mortgages. Again, remember, banks are for profit. They care about the shareholders, the stock price, right? So when they go and reduce their rates, maybe let's just use like BMO, or actually let's use HSBC. It's always HSBC. HSBC comes out with like 1.99 variable. Then RBC looks at it like, whoa, all right, we're reducing our mortgage rate. Then the other ones look at it, and then it's kind of like a cascading effect because everyone is drawn towards whatever the mortgage rate is, right? So it becomes competitive, and that's why the summer market for banks, you always see these discounts. Right. So number 3 thing that the bank lending could mess things up. They could recall your mortgage. Yeah, that's a thing, right? So if you have no money to pay off your mortgage, you basically have to sell your house and liquidate your funds. But And that's going to cause a huge real estate market. Again, I don't think that's going to happen, and I'll get into it a little bit later. But if the bank feels that they don't want to lend you anymore, they can basically be like, hey Zen, I want that mortgage back. So if I owe another $400,000, be like, you have to give me that $400,000 like that. Now they can't just call upon your mortgages like that, right? But what happens is usually in the clause, if you have like a default, right, saying like you missed 1 month, they'll be like, okay, Zen, you missed 1 month of your mortgage. I'm going to recall of it. They can't do that. It's in the language, right? But are they going to do it? Probably not. I've even seen some in like credit unions where like if you're kind of on a leave of absence or unemployment for a little bit for a temporary time or even like an extended period of time, they could potentially recall your mortgage. It's in the language of the contract you signed when you got the mortgage. Now, is the bank going to do it? Probably not. And I'll get into it a little bit later. But that's the third thing that can kind of mess up the real estate market. Because if everyone has to pay off the bank's mortgage when they recall it, well, we don't have money for it. I got to sell everything. So inventory, whoosh, onto the market. Prices crash. Fourth thing, the banks don't let you renew. Right. So anyone who's had a mortgage knows that generally in Canada, we have mortgage terms of 3 to 5 years. Although our mortgage is like 25 to 30 years, we renew every 3 to 5 years. So we saw a little bit of this issue in 2018, but let me explain. Whenever you go renew your mortgage, the terms change, right? Like the contract changes. It's kind of like an example. You go to, your favorite mobile wireless company, and then your discount ends in 2 years. You try to get a new one, right? You're trying to renew that contract. It's the same thing with mortgages. So if I got, say, 2% interest rate 5 years ago and I fixed it in, now that my mortgage is up for renewal, I have to try and get another one. So what if the banks have to re-qualify me, right, under maybe the new stress test, or maybe they just don't want to lend anymore? If I'm not able to get that new mortgage or that new 3 to 5 year term on my mortgage, then I can't pay it back. And that means I have to pay the balance of that mortgage, right? So we had this issue in 2018 where if I went into the bank and I got a mortgage and I bought this house before 2018, I was totally able to qualify for it, no problem. But then when it came to renewal, I had to stick with the same bank, because if I had to move somewhere else, the other bank had to put me under the stress test, and I don't qualify anymore under the stress test. So that messed with a lot of people, and they couldn't move banks. And some banks just increased the rate on the renewal because they knew that the person renewing couldn't do anything about it and had to stay in. So they had to suck it up and take that higher interest rate. Yes, that happened. So you see what I mean? Like it's kind of a dick move by the banks, right? Realistically. But if the banks wanted to not lend, they have that ability to stop it, right? So that when you can't renew, it means you have to pay back a mortgage, or you have to go into higher interest rates. It's going to maybe tell people, oh, you know what? I don't want to hold this property anymore. I'm going to sell it, right? When you want to sell it, inventory floods the market crash. So there's 4 things that I just talked about in the bank lending that could make the entire real estate market crash. Now, let's go through, are they going to happen? So number 1, if the banks think the market's too unstable, is it going to stop lending? Yes, this is one of the major things that can happen. We actually just saw that almost happen in COVID, because remember, I was saying earlier, banks are for-profit businesses. They care. The CEO cares about that stock ticker price. They want to make sure it's high, right? And the banks have a whole slew of different products, but all their products come from, I create money, I lend it out, I'm earned from the margin, meaning if I can borrow at 0.5%, whatever the Bank of Canada interest rate now, I lend it to you at 2.5, I make the spread of 2%, right? So when COVID hit, the interest rates dropped. But what happened is the banks froze up, and they were like, do I want to lend out to you anymore, right? So really what happened was the government came in and intervened, and they bought all the bank's outstanding debt, meaning that the bank's balance sheet was empty. They had a ton of ability to lend more money. And that's what they're, okay, fine. We will lend. Here you go, people. Here's money at lower interest rate. So that's why the interest rates in COVID, when COVID hit, they went up, the mortgage rates. And then afterwards, when the government bought back all the mortgage from them, they call them mortgage-backed bonds, they bought them all back. And then the bank's books open up and they're like, okay, fine, we'll lend. And that's why the interest rates came down afterwards, right? It's not necessarily, following the Bank of Canada, but that's a little bit of a reason, right? Kind of in short. So is this going to happen? We just saw it almost happen in 2018. And then the government policies, right? Government came in and went, shoom, nope, we're not letting that happen. And then it stopped, right? So are we going to see more of this in the future? There's very much chance, because we just saw it happen, right? Are the banks going to maybe freak out? Yes. But the question in play is, if the banks freak out about it, is the government going to do anything about it? Now, our interest rates are already so low. Can they even get lower? And the question is, Well, not the question. The answer is yes, because we can see negative interest rates where if you have it in the bank, you're losing money, which is going to force people to actually spend the money or do or something for it, right? So that's going to force the banks to lend. Now, there's like a whole bunch of studies if you guys follow like economics or whatever, whether like negative interest rates are actually good for the economy. I'm not going to get into that, right? But this is just me indicating to you that can this cause a real estate market crash? Yes. The question is the government going to allow it to happen? From the looks of it so far, no. But at some point, the government may run out of things to do, right? Like they can only intervene so much, right? And they can only drop interest rates so much. So we're going to have to see and again, follow the government policies because that's why I put them number one. They dictate how lending is going to happen and then the banks. Number two, can they increase mortgage rates? Well, we just said it earlier, right? Yes, they can. And we saw that happen with COVID already, right? With the prime plus or minus whatever. Again, they can change it, but the governments can swoop in. The third one, can they recall your mortgage? Is this going to happen? I think it can happen if they freak out. But I think the first two things are going to happen first because you have to remember, like when we're talking about the mortgage deferral cliffs, everyone's freaking about like, oh, if you can't pay your mortgage and you default, is the bank actually going to recall the mortgage or sell the property? You have to remember, the banks are set up to lend money and collect interest rate to make money. They're not in the business of taking your property and selling it on foreclosure because that's not what they do, right? It's going to decrease the revenue. It's just not what they're set up for. So they're more likely to maybe restructure your mortgage or do something, maybe earn more money or reduce the risk. Because at the end of the day, they just want to increase the revenue and they're not going to try to sell real estate. That's not what they're for. And then the fourth one is, are the banks going to not let you renew your mortgage rate? You know what? Like if one bank doesn't renew for you, right? I'm sure the other banks will allow you for it. And then that's going to cause a cascading effect of, competition so that, there's no giant monopoly for the banks on renewing a mortgage because we saw that with the stress test. So I don't think that's going to happen. The most likely thing that could happen really is the banks kind of freak out and they don't lend. And the major thing is whether the government's going to step in. I think that's one of the biggest blocks for if the Toronto real estate market is going to crash because that is going to either allow money to come in or not allow money to come in. That's why in previous videos, you may have heard me like, it's the banks versus the government, right? The banks sometimes are freaking out. They don't want to lend. The government swoops in and be like, lend, right? So that's the kind of the dichotomy of what's happening. And those are the things I would really, really watch out for that could cause a real estate market crash. So number three, this comes back to talking about market fundamentals. A lot of people talk about like real estate fundamentals. What is it really? I'm going to kind of go into it, but it comes down to a few things, which is income, jobs, supply, and immigration. We've talked about it in like some way, shape, or form here and there, but I'm going to break it down into how any of these one things could cause a real estate market crash. Now, this, I put it number three because it's not likely going to cause a huge market crash because it has to be so dramatic that for it to actually cause the market crash, but it could maybe like skew the market a little bit, maybe cause a little dip, right? So the first one is income. I've already been through this a ton of times. Incomes haven't caught up to real estate prices. If you go back to like early 2000s, I use something called like a multiplier, right? Which is like, what's the average income to the average price? So if the average income was $50,000 and back then the average price was $400,000, that's 8 times your income. Right now, last time I checked, the average income is like 50 something, right? In Toronto, I skewed it a little bit to like young professional income, right? It's actually like 60 something. And then the average price right now is like $900,000. It's stupid, right? So 2 years ago, it was 14 times. Now it's 17 times. So you see that gap and multiplier of your income just keeps getting higher and higher. At some point, it's going to get so outrageously high that it's impossible to buy, right? So right now we're seeing that some people may still qualify. You buy a smaller property, and you're still able to afford for it, right? It's harder to buy detached, but when like kind of people get married and their income's double because they can qualify, they can buy something bigger, or maybe their family has given them some money to help them out. But at some point, it's just going to get stupid. So this is what I really can foresee. And I'm just kind of mapping out what I saw in China with like Hong Kong. So when we get to like the 20 multiplier rate, it just becomes stupid. No one can really buy it, right? So people who have money or real estate, they're going to pass it down and hand it off. But then when it gets to that point, in order for people to qualify more, instead of maybe just like, the wife and the husband, now maybe the parents come involved, right? So now these are like a triple generation. It's triple because, like maybe if the husband and the wife has kids, that's a generation, right? So it's like grandkids, kids, and the parents, right? Or wife, husband, grandparents, and kids. Yeah, whatever, right? So 3 generations. So this is already a very common occurrence in like immigrant families, right? So you can see a lot of like the mom, dad, and the son and the wife, or like the daughter and the husband. yeah, whatever, right? So that stuff, like 2 generations of income coming in to buy something, right? Because generally it's just 1 generation of income buying something. So what if 2 generations of income in? So maybe then we can support that multiplier even a little bit more. So maybe we get to 20, 25. And then maybe at that point it just gets stupid. Then no one can buy. So at that point, we're getting near like Hong Kong territory, right? To give you an idea of what the multipliers are in some of these like big cities that we're always compared to, in New York, I think last time I checked, this was like a few months ago, it's about 19 times your income, right? And this is strictly in the Manhattan. In Hong Kong, it's 44 times. 44 times, right? It's that ridiculous. So is there potential for Toronto to increase in prices to like those cities? Yes. We're actually not that dense compared to those cities, but the thing I was telling you that could cause a market crash really is if the multiplier gets so big, whereas like incomes don't come down fast enough and then incomes stay up, real estate prices stay up, then the market could come crashing down for a little bit because no one is going to be able to buy and it just stagnates. And we've seen those in some cities like New York. The second one is jobs. This could most definitely cause a real estate market crash because we saw a little bit of it in COVID. Anyone who was hit by COVID really hard, they don't have income to support the mortgage, they default, they may have to sell, right? So if for whatever reason jobs just disappear from Toronto, yeah, it's going to cause a huge market crash. The third one, supply. I've talked about this like in so much. Like if we can have a huge surge of supply, which is kind of like what we're seeing in the downtown condo space, with a lot of pre-cons finishing this year, then it's going to cause supply to increase, which means that there's more supply than demand. Because there's more supply than demand, you can't increase prices. Maybe prices even come down because there's more options for people to buy. Maybe they're not as rushed. There's no multiple offers. Then prices can come down. Is it going to crash? You're going to need a ton of inventory for the crash, but I'm going to talk about it later. Here's another one, right? Immigration. If immigration stops, and this is like a good case study is like if you look at Japan, which has like negative interest rates and actually like a sloping immigration, prices actually stay stagnant or they drop. Because when you're building houses and there's not enough people to absorb those houses, whether it be investors buying for people to rent or people buying, then really you don't need more housing because your population isn't growing, right? So those are the reasons that could see a market fundamental cause a crash. But all of these are kind of like, I said, minor tweaks that may cause the prices to come down a little bit. But for it to crash, maybe you have to pull the levers of all 4 of them, right? Now, are these going to likely happen? And actually, that's just it's not. Realistically, it's not going to happen, right? Maybe like 1 or 2 may happen and cause like a price drop a little bit. But the reason why we still I say the Toronto market real estate market fundamentals are strong is because all 4 of those things I just said, income, jobs, supply, immigration, were like ding, 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 ding. Toronto's fantastic at that. That's why it makes sense to invest in Toronto or like the GTA, right? So let me go back. Are incomes high in Toronto? Yes, incomes are increasingly high. So if you look at like tech jobs and the amount of like high income jobs coming, there's a ton. Then you have to also look at the fact that like some US companies that hire here, yes, there's taxes and whatnot, but when our currency is like 70% of the US dollar, hiring good talent here is actually cheaper than hiring talent in say like the Bay Area. And I've seen this a lot, right? Like anyone who wants to even make more money and break like the $200,000 kind of income, if you're in tech, they move to US and they get paid in US dollars, right? So when you bring it back, it's like 250. So is there going to be more jobs and income increasing in Toronto? Yes, absolutely. Are we creating these jobs? Yes, absolutely. Even like some of the investment cities that we're looking at, like say Oshawa, we already announced that like the GM plant is bringing back 15 to 1,700 jobs and they're revitalizing in the next 2 years, right? So yes, jobs are coming, incomes are coming. It's there. I don't think it's going to crash. Maybe we've had that little dip because of COVID, but there's a lot of jobs that are stable and they're still in demand. The other one, supply. Talked about something in a huge amount. There's so much red tape that for us to increase the supply really quickly, the government has to just stop what you're doing, right? Like if you saw some of my previous videos, I talked about how the price, like the cost to build a house, like 20% of the price is like in taxes. It's like development charges, levies, like soft costs and all that shenanigans. So if you were to like buy a pre-con for like $500,000, like 100,000 of that goes to the city. It's in taxes. It's stupid, right? Because yes, the city needs to make money on it and has a revenue on it. But if you just remove the taxes or have some kind of incentives, wouldn't that allow the builder to sell it for less money so that they can actually increase the supply? So again, this drives me insane, but like remove the red tape and then we can increase supply. Is it going to happen? Probably not, because things have just gotten worse for the development side. The other one is the green belt. Everyone talks about it, the green belt. Where like Toronto's like bookend by the green belt and the lake. So are we gonna kind of bulldoze into the green belt? Most definitely not. Like Ford even tried to do it, everyone shut them down because we're very climate sensitive now, especially you could see with the way the last election happened, right? So no one's going to take down the largest green belt in the world. So we're landlocked. That's not happening. So the amount of land we have to build is very scarce. So to get that land gets more expensive. And then when there's so much red tape, like I was talking about earlier, it becomes harder and harder to build and more expensive to build. So therefore, the amount of supply that comes in becomes harder, and the supply that does come in becomes more expensive to buy. Then the last one, immigration as a fundamental. Is it going to stop? No. Canada just announced that they're going to increase their immigration numbers by like 10%. So now every year we're trying to do like 400,000. So the last time we were targeting, I think 350. This was before COVID, so like 2019 or 28. Yeah, 2019. We actually went to 400 almost. So is our 400 number going to increase more? Probably, because the Ministry of the Finance, the guy who's responsible for the immigration in Canada, the minister, basically said that for the economy to grow, we need to bring in more skilled workers. So this means higher immigration. So I don't think the numbers are stopping. Now, we look at density for immigration. Is Toronto very, very dense? You know what? Downtown Toronto is already very dense. But when you compare it to different cities like I've been to, like Shanghai, Hong Kong, or Tokyo, or like even New York, we are nowhere close. So is there more density? Absolutely. Are there more condos coming into downtown? Absolutely. So we can always grow in that sense. Now, for the immigration to become like very, very small, or like the reason why people don't, sorry, let me back up. For the immigration to kind of slow down, we have to really compare ourselves to what level of immigration is coming in compared to the rest of the world, right? So some of the best places to immigrate to and have a new life for immigrants want to come to is like Canada, US, and Australia. So when you look at it as a percentage point and why so many people come, Canada per capita gets so much immigration. It's insane. So if you just Google like population growth, right? Canada has about 1.4% of their population growing every year in the last few years. US has 0.6%. And Australia has about 1.6. So Canada and Australia is about the same. And if you look at it, the Australia and Canada real estate market, we're very similar in the sense that everyone is saying the real estate market is very, very hot. It needs to get, slowed down a little bit. And that's because the immigration that's coming in. If you think about it, Canada has 36 million people come in, 1% every year, 1.6%, that's $400,000. 400,000 people come in, which is what Canada expected. So we were pushing those numbers. Australia has 25 million people and they're getting a little bit more. So that's why when we look at immigration and all these fundamentals, when you have good jobs and income that allows kind of new people to create a new life here that's safer, then more immigration, more people want to come. And when the country itself wants to have more immigration come in, then we're going to actually have a lot of demand for real estate. And when you mix that with all the red tape, no green belt, and like how long it takes for us to build anything, that's why we have a giant supply crisis. And this is what I mean by it's a market fundamental. Can all of those four things like basically go to the pooper and cause a market crash? Absolutely. But how are all of those four things I talked about going to even happen simultaneously, right? Are jobs just going to disappear? Is the greenbelt just going to get bulldozed? Is the government just really, okay, you guys can build whatever you want, go for it? And are people going to not want to move into Canada? No, right? Like I just went through all those points. Like, can it happen? Absolutely, yes. Is it going to cause a market to crash? Absolutely. Will it happen? Just based on the logic I applied? I don't think so, right? And then here's just some like random ones I thought of that don't apply to any of those categories I talked about. Let's just say the cost of real estate decreases, meaning like the cost to build. So like wood, metal, aluminum, steel, and labor decreases. Is that going to happen? I don't think so. I mean, if you have been following any of the news, like COVID has messed up the supply chain and lumber has doubled in price. Like people can't even build a deck right now. So I don't think prices are coming down anytime soon. If anything, the cost to build per foot is probably going to increase. I've been seeing that in contractors. I've been seeing that in some of Altus's studies for how much it takes to cost to actually build like a condo or a house now. Here's another one, right? Like I didn't talk much about it, but like what's going to happen with the virus? What if the vaccines don't work? Who knows, right? No one knows, right? But like if I look at all the things that cause the market to be like somewhat dip and then like recover a little bit, how do I put it? the virus didn't do that much. It kind of put a pause on the market and it changed the demand, right? So it's not that people didn't want to buy real estate. It's what real estate people wanted to buy changed, because no one is buying in the condo space right now and everyone's buying outside the condo space. And then the prices have still gone up and the number of transactions have gone up. So if you make sure you like and subscribe the channel and this video, because I'm going to be talking about like an end of the year wrap up of kind of what's to happen. And that one's going to be good, but I'm just collecting data for that right now. So is a vaccine going to make things go back to normal? Probably not so quickly. Is no vaccine that's going to fail going to make things even worse? Maybe, who knows? But seeing that what we've saw in the last, 6-8 months, whatever we've been in during this pandemic, it hasn't affected the real estate market that much. And when a lot of people kind of talk like, oh, is that in house business and whatever, I'm like, you know what? Like, we've just been operating as normal, right? Like, we have all the safety protocols, gloves, mask, and everything when we go see houses, but it's actually kind of made looking at properties or selling stuff a lot easier as long as we follow the protocols, because real estate was deemed an essential service. Why? I don't know, whatever, right? But it's allowed us to continue trading. And the government still wants us to trade again, because I think it's such a big part of the gross domestic product, GDP. So is real estate going to be affected by, maybe the pandemic going sideways again or whatever? There's a chance, right? But we've already kind of adopted as an industry to how we trade real estate during a pandemic. And I only think this is going to stay, because although there's some protocols we have to follow, I think it's in everyone's best interest to stay safe. And as long as we follow those, I don't think there should be any major issues. Now, are open houses gone for a long time? Probably. Do I still do open houses? Not really, because secrets out. I always tell my clients, like, the open houses aren't for selling the house. It's for the agents to find buyers. So like, the open house doesn't really do anything. Anyway, so wrapping up all my train of thoughts, right? There's three things that could potentially cause the real estate market to go crash, right? Number one is government policies, and I went through all of those. And number two is the bank lending, and number three is the market fundamentals. I don't think the market fundamentals ultimately is going to cause a crash, but a combination of one and two, government policies and bank lending, mixing them together as they're fighting, but like maybe one side wins, reducing the ability to buy or reducing the amount of credit that's being lent out, or maybe just like what the government does on their back end, can cause a market crash. Is it going to? There's a chance, right? But I've been through all the logic with you in this longer podcast, and I'll leave it up to you to decide whether real estate's going to crash, right? Like, the whole purpose of why I did this is I want to go through the thought exercise of, what is it really going to take for this resilient market in Toronto, for like the real estate market to crash? I'm just going over, man. I'm like, okay, this has to happen, that has to happen, and just apply the logic, or maybe you have your own rationale, apply it and see if any of those things that can cause a crash will happen. And if you can't come to terms with like the logic of those things happening, then there's a good chance the market doesn't crash, right? So it's not about me being bearish or bullish on this. I'm just trying to apply some logic and rationale to it, and not just like take the emotion out. Because yes, I own real estate. Do I want prices to go up? Yes, but at this crazy rate of like 10% a year? No, I don't like it. I think it's unstable. I prefer a little bit less so it's consistent. But if you don't own real estate, do you want prices to go up? Absolutely not, because you potentially want to buy. So that's why I said take the emotion out and just apply the logic and really think about, what is it going to take for the Toronto real estate market to crash. I hope this was helpful to you and gives you a little bit of an idea of, which way we're going to head. I personally don't know. I have no crystal ball. When I apply these like predictions or logics or all these things, it's just me thinking with what I know to see how the market is going to respond to certain things. So these things that are applying, can they happen? Maybe. Is the logic there for it to happen? You know what? May not realistically happen, but there's a chance, and those are things we have to watch out for, because they are leading indicators of whether the market is going to crash or not. So hopefully this was helpful for you, not to freak anyone out or not to upset anybody or may have any bullish or bearish. This is just me kind of like putting my thoughts together, because I know I've been asked about this quite a lot, and I want to put it all in one semi-cohesive way for you. So maybe I went on the tangent, I apologize, but hopefully this was of some value. And if you do like this kind of content, make sure you give the video a like and subscribe to the Prime Props Your channel. The button will be somewhere over here. I don't even know where my screen is right now. So, but somewhere over here. So until next time, your move, your future. Stay safe. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.